Welcome to the Real Estate Show on KMED this December weekend of 2015. Pete Belcaster and Joe Brett, the Real Estate Guys, with you. I'm a principal broker with John L. Scott, and Joe's a broker with John L. Scott Real Estate in Southern Oregon. We get together with you once a week here on KMED to talk about all sorts of real estate-related topics and issues. And here we're finishing up here 2015 in our 5.5 years, and man, we've talked a lot of stuff, haven't we?
We've learned
Our listeners are really smart.
Yeah, so are we. I mean, this is our continuing education on a weekly basis, and we just have some great folks that bring the latest information. It's got such a local angle to it that's really beneficial to our listeners.
Well, today here on the show, it takes a team to actually make a real estate transaction. It's just, it's not like the broker. You think the broker, but the broker is only one really small part of the whole deal to make it all work. You have to have people to do that. So today we have an interesting show because Guy Giles is here from Ditech Mortgage. He's our resident all things mortgage expert here on the show. And, Guy, but first of all, welcome to you here. And I'm curious as to how your week went with the when they raised the interest rates. Did the world didn't cave in? What happened in the market? By the way, how are you? And Merry Christmas and all that good stuff.
I'm good. Merry Christmas. I'd say I'm ready for Christmas, but I'm really not. I think I bought one gift, and I got a tree up, and I built a snowman so far. So I'm not super prepared, but work's got me down, so that's the reason.
You're busy.
Yes. Yeah.
See, even here at the holiday season, you think that things slow down. When we looked at those stats last time, we saw it different.
Is it even maybe busier than the finish of 2014?
You know what? I can't even think back that far. To be honest, I remember being in the middle of December last year thinking we never even got a slowdown.
Yeah, you bought one gift.
Yeah. I may have had 2 gifts by last year, but no, it's staying busy. And It did last year, and it's just continuing on.
So what happened when the Fed raised this quarter point? Did the markets go? What happened? I'm sure your company had all sorts of information out there. What took place?
The markets kind of did their thing last month when the Fed came out and talked, and I think over 90% of the Feds, because there's your main Fed, and then there's a bunch of little mini Feds that run around, for lack of a better word, and all of them were pretty much ready to raise the rates. So we knew that was going to happen about a month ago. So we really saw the rates go up about a month ago for that, and then they kind of settled down because the economy's not completely fixed yet. So we even had some job numbers today that rates actually went down today from where they were yesterday, and they really didn't go up yesterday when the Fed talked, because again they already had this thing baked in over 30 days ago.
Well, certainly you'd say the industry was prepared for it, so it certainly wasn't like a shock. Maybe that's why they reacted the way they did, which is smart.
And I think the only thing that was real news yesterday was the pace in which they're going to raise rates, and that's what really everybody was looking for. They knew it was coming. They knew the Fed didn't really have anywhere to go if anything happens with the economy at this point, so they had to raise them a little bit, so they had, again, somewhere to go and bullet in their gun, so to speak. So they've done that, and they've talked about, hey, we're gonna raise them, but we're gonna raise them slow, and the market's like that.
So what this week here for you, when you're with clients, what are the rates or what are the ranges kind of that you've been quoting people then?
Well, it's funny because I always kind of give a general quote, but I have some really cool people moving in from New York this week. And I quote them, and they've got great credit. Actually, these guys are really cool. You guys will be glad to have them in the Valley. Took them out shooting on Friday, and it was a lot of fun.
Well, I like those kind of people. Okay.
Anyway, but you're quoting anywhere from really low 4s to, I had somebody else come in a little bit later, just yesterday, that had a little bit of a lower credit score. So we were looking more of around a mid-4 with a lower credit score. So, it just depends. If you have a good down payment.
Tell me about conventional loans. Where are those at? Tell people what they're coming in with and down payments. That was always such a big thing. When I bought my house, I'd have 20% down. Remember those days? And they're gone. But that's really good. So.
They are. And if you have 25% down, you're going to get a really good rate. I have a gal moving down from Washington that I'm going to go finish up for Cheryl tonight and get her letter out, and she's going to be in the high 3s. So really good credit, really good down payment. Everything's just ready to go. But I'm seeing a lot of 5% downs and a lot of 10% down second homes, people moving to town.
Well, that's good to hear. And for folks not scoring at home,
you haven't been following interest rates and the housing market, or you're kind of new to the game and you've heard that interest rates are good, these are historically low rates and historically kind of augmenting your buying power of the house that you can get into and a loan that you can get into and sustain, and the opportunity is still there. It's going to nudge up. It's not going to stay this way for a long time. So I think 2016, opportunities, certainly it's a seller's market, it's tight inventory, but opportunities are going to be there for the buyers to still get in with a really good opportunity to build equity and to build their future.
And are they getting conventional loans? Is that still the big thing?
For the most part, I've had a couple people come in and get pre-qualified for some USDAs just since our last talk, but literally both of those are not buying around here. They're buying over at the coast where they could actually do it. It's not as attractive as it used to be.
Isn't that funny how that has changed?
About that
we've really changed that where it was FHA loans at one point in our show. I remember in our years here, 97% of all loans were FHA loans, and that has really reversed. Well, Corinne Waz is a business development officer, I guess, from Amerititle here in the Medford area anyway. So, Corinne, nice to have you here.
Hello. Thank you for having me.
And Joe Corinne, I might say, is the first Washington Husky who we've had in the house here at KMED. So,
representing.
I have to be fair to everybody in the Pac-12.
You dub.
We got to.
Dubs up.
Yeah.
If we didn't have our rivals, we wouldn't have a league. We wouldn't have all those great games.
Nice to have you here.
Thank you.
So, Corinne, tell us what, they're Amerititle's where you're at. Tell us what you do there, first of all. It's an interesting job.
It really is. I'm very fortunate, and I do love my job. So business development, basically, like you mentioned earlier, it really is a team. So it's my job to kind of be an extension of escrow. As you're working on a transaction and you're sending it over to a Amerititle escrow officer, then I will want to follow up with you. Your escrow officer usually is in the office working on your transaction, communicating, working with the inside team, working with the title team. They'll get out of the office when they can, but my job is to be out of the office as often as possible.
You're kind of like the face of
I am. I'm the
public face.
I'm the kind of the more of the liaison, if you will.
Liaison, that's yeah.
And sometimes I'll get asked some of the tough questions where if it's really intricate details, I may not know the answer on the spot when I'm looking at my client, but they're a phone call away. And so I can expedite an answer for them. I can do what I can to get an answer for them, or just have them feel that part of the team is they're being touched. It's really about relationships. I want them to feel confident from beginning to end that their transaction is being handled as seamlessly as possible. And usually they have more communication with the escrow officer than the title officer, their assistant. And then it's more of, being in the community and in the industry so that I can bring awareness and information.
There's nothing better than a good title officer in real estate, isn't there?
They orchestrate the whole thing.
Yeah.
We do our little part with the loan, and I don't mean to diminish realtors or loan people or whatever, but the escrow people and the title, they're the ones that they orchestrate the whole thing. They're kind of the liaison between everybody, and they're the ones that are sitting there putting all those numbers together. And that's even a moving target. If you call them up and say, hey, we're going to do this a day later, or, the seller couldn't get in to sign, and it's unbelievable the amount of work they do to just coordinate a closing.
We basically give them like brokers. We send them all of the documents that we have, right? All the signed documents, all the things, and then you do the same thing as a lender, don't you? You send all the documents, so everything gets pushed into the escrow officer, right? And they got to do their thing. And I don't know what that thing is, but it's like magic.
They make it look so easy. They really do. There is so much that they actually are doing throughout the whole course of the escrow transaction. And you had mentioned, title officer, and they are a very important part of the process, but it's the escrow officer that they're the one that the agent, the lender, the client is usually having more communication with. Mm-hmm. But just a little fun, very, very proud of our escrow team. Amerititle, we locally examine our preliminary title reports from beginning to end. So everything is searched, examined under our roof right here in Medford. So we're proud that we have that local touch, and we don't outsource anything. Nothing leaves U.S. soil. Nothing goes offshore. So if there was a tricky transaction, to know that you can come in and know that that title officer knows everything about it, it allows us to have faster turn times, and that they know all the details of it.
You guys are a Marititle, so you better keep it on short.
We do.
Yeah.
It doesn't leave Medford.
Remember, a Marititle, was once owned by Jeld-Wen Corporation. Remember when
that's correct.
When they owned that and that kind of thing, right?
Yeah.
So they sold that, and now
Now it's owned by a company called Futura.
Okay.
Futura, which is based out of Boise. Yeah.
3 hours of my continuing education for this last round was on the title process. I learned about the title plant. I learned about the whole hierarchy and the flow of the work through the title company. And I learned the incredible story of the documentation that goes back to the 1800s sometimes, and how all of that has come forward and then been synthesized into the digital world. It was one of the cooler 3-hour continuing education courses I've taken. I would recommend it to you or even our other realtors, because it really helped me get a grasp on how much work takes place there on behalf of your client to get that clean and clear transaction.
It does, because that's where the insurance falls into place. So we're ensuring that preliminary title report that is clean, it's clear, nothing's going to come back later to haunt anyone. But a lot of work goes into it. People think I need my prelim, like all you were doing is typing in a name and emailing it out. But they have work to do. They have to do their due diligence. And if it's, a lot of past ownership and going back and chaining, it's a lot of research.
No, so, it absolutely is. How busy is your offices? I mean, are you seeing the same type of thing that? Try to find a home inspector. It's really weird. You can't. They're backed up. Try to find an appraiser. It took weeks to get an appraiser out to come out to Robertson Bridge Road where I was at. There seem to be busy. And does it filter down? Tell me about the escrow world.
It does. So we're as busy as agents are, as home builders are, as the lenders are. We love that. As an industry, the busier everyone is, we are busy. Anything that's residential, commercial, that's going to involve a escrow signing, then that keeps us busy. That keeps us happy. We're never too busy. We're having a fortunate circumstance where we're able to add to our teams. At the end of the year, traditionally things might slow down, but it's nice to know that we are in a healthy state where we're able to actually hire.
Add some people to help on the deal.
Yep.
Hire. Good word.
Yeah.
That's a very important word.
Absolutely.
Yeah. Guy Giles, how much talk do you do with escrow officers as a lender? I'm trying to think of how much, Joe, you and I would do talking, to the escrow officers that we're dealing with. And maybe it depends sometimes if you're the buyer or the seller. That may also have something to do with that. But I'm curious as to how much do you actually talk with the lenders? With the escrow officers.
That's one of the things that's kind of cool about having a good escrow person is literally we don't have to communicate a lot. At the end we do a little bit. With the new TRID, we have to have their closing disclosure out 72 hours before they can sign their document. So we have to go in. We have to coordinate with them ahead of time now. Make sure that we have. In the old days, we just send out our stuff and they'd send it back. And now with all the disclosures, we're talking days that we have to do. So we go in with them and we coordinate, and it's mostly my processor. We do our things local too, where we have our processors that are sitting right here. So it's Jennifer that ends up talking to them a whole bunch more than I do and just coordinating and making sure that everything's right.
Have you ever had any deals go bad because of the findings of the escrow officers in a deal? I was trying to think of my own, and I don't think I've had that type of a situation at a railroad crossing once that was almost going to sink a deal, but that didn't have to do with escrow, I suppose.
They actually caught one last week that we're working through right now.
Really?
A place over in Gold Hill that there was a tax foreclosure on.
Okay.
So we're in the middle of kind of getting that title cleared up right now. It was a purchase one, and I honestly, off the top of my head, I can't remember what title company we're dealing with. There's a couple of them in here. I like Marititle a lot. But
thank you.
Anyway, we're just right in the middle of it. And again, what they're doing is they're assuring if a plumber came in, 3 months ago and did a little bit of work on a house and that person didn't get paid, that there is a clear title, that there's no liens against the place. And yeah, we've definitely had things show up in the past. We have a bunch of really good real estate agents in town that do a lot of that. I know Cheryl Malone is down there at the county checking permits and things, whenever she does one. And I know a lot of people do that. So a lot of the things, get handled before they ever get to us. But we got, long story short, yes.
Well, I find that when you have your ducks in a row, the whole thing goes a little bit easier, especially for escrow officers, because you don't want to, get into something and give them all the information that they need so they can work at it. I mean, that would seem to make the most sense, right?
And that's a lot where the communication falls into place.
Yeah. So, all right. Well, we'll see what happens there. You got to have the escrow officer, and you got to have the lender, and you got to have the broker to make it all work. Then you got to have the buyer. You got to have a seller too to complete that transaction. The Real Estate Show here on KMED. We're coming right back after this. We're with Guy Giles and Corinne Waz, and don't you dare go away here on KMED. The Real Estate Show continues here on KMED this December weekend of 2015. Pete Belcaster and Joe Brett, the Real Estate Guys, with you, and hope your Christmas holiday shopping has been going well. It's not a party weekend. This is the biggest party weekend, of the year, kind of.
That's a good thing.
Before Christmas, the weekend before Christmas, right?
A little fellowship, get together, enjoy your friends. We had a great gathering with our John L. Scott folks,
oh, my goodness. There's like 250 people.
That's quite an effort.
At that event.
Quite an undertaking to put all that together. It's a great time of the year.
Yeah. Well, when you had a year like John L. Scott had,
That's something to celebrate.
You can do that. You can throw a big party because they had one heck of a year, as we've talked about what has been in real estate. So the issue right now, here at the first of the year, is still going to be, again, the gap we talked about, that there are not enough new listings replacing what is being sold, and we're seeing that. So that puts pressure on prices, and that makes the whole kind of
inventory
move around. Anyway,
stay tight.
Today here on the Real Estate Show, we're with Guy Giles from Ditech Mortgage. He's our resident mortgage expert here on our show, and Corinne Waz from AmeriTitle, a business development officer down there, and here on the show today. Guy, so what is there any new loan programs or loans that are out there that you might want to share that people might want to think about? Because we always look for some good deals if you can find them, right? So is there anything out there?
Well, the conforming ones, they kind of brought back the 3%, which it really didn't go away, but it was a first-time homebuyer program, and they're making that open to everybody now. So
as a conventional loan,
yes,
correct?
Yes,
3% down.
So
that's okay. Think about that for just a second here. Again, from our listeners. Because how many years did we talk about FHA? What did they put down? You have to put down, remember, 3.5%. Plus the mortgage insurance was part of that. But 3.5% was FHA, and now you're saying that conventional loan even less than that. Wow.
They're looking for ways to loan money. I mean, I think they really want to.
Okay. So what is it? Okay, tell about that.
Tell you about that one?
All right.
Well, I mean, that's the main function of it. I don't have one priced out today with me. Actually, on the next program, we will maybe dedicate a segment to that, because it is an important program that's coming out. Again, USDA is just not as attractive as it used to be. So if you can, kind of come up with a little bit, which a little skin in the game is not a bad thing. I don't know when we got to the point where everything ought to just be completely free.
Well, USDA, rural development loans, and they started charging, I believe it was a 1% fee to start. They have raised that again, by the way. So they're still trying to pay for the program without taxpayers, but they've raised that fee, the loan fee, I believe, to 1.5%. I think it's right around for rural communities, and that's too bad.
It's not, and I think the biggest thing that's hurt that program, because there's still very good rates on it, but what happened was there's income limits on it, so you have people that are looking at an appreciating market right now, and literally it doesn't pencil by the time you figure out, hey, I've got these income limits, I can't make over this, and they count everybody in the family. So if Uncle Bob lives with you and he's getting a Social Security check, they're going to count that income. If you have any kind of savings or any kind of assets.
It's a pretty high income limit, isn't it? I mean, it's like...
It's the low 70s. So, I mean, it can go up to 90, but believe it or not, people eat through that pretty quick these days.
And I think part of it, too, is, our home values have come up so far from 3-4 years ago, when the USDA program was such a viable option with no money down. As long as you're outside of the city limits of Medford and Central Point, that opens some doors for people to get into the home owning market.
Yeah, that is the other piece of the thing is their debt to income ratios are a lot lower. I mean, you can get an FHA approved a lot of times over 55% loan to value. Or loan to value, pardon me, debt to income ratio. So that's for every dollar you make, you could have 55 cents going out for bills. And, you're looking at 29, 30% for that program. So it's a ton lower. And so it just doesn't fit that many people anymore.
Well, it's amazing how the loan world has changed in our showtime.
As the market changes.
As the market has changed. When values were down in the bottoms and the dumps and the foreclosures were there, FHA was the only way people could go. I mean, that was it, wasn't there?
Conventionals were 20% down.
Conventionals
were
not
really
were not good. So look how that part of it's changed. USDA everybody was wanting a USDA loan, and now you're saying they don't hardly even see them anymore.
Yeah,
hardly see an FHA loan anymore even as well. And how strange is that?
FHA is a great option if you don't have perfect credit, because it's mortgage insurance. It's there, but it can go pretty high if you have a low credit score. So it's actually, for a lot of people, it's not a bad program at all.
Yeah. Corinne, what down there at Amerititle, when you go out and you're trying to find agents and trying to find people to come to you, and there are 3 of you here in town, right? There's 3 escrow places, and we've done business, Joe, and you have too, I'm sure, with all 3, haven't we? I mean, we really have. I mean, we got escrow friends and all of them. When you go, what's the difference of the 3? I mean, what would you say someone? Because a lot of people will pick, an escrow officer. The sellers, will say, I want this done with so-and-so at a certain place. So how do you, what's the difference kind of separates the 3 of you? I've always wondered that.
That is a good question. Yeah, there's 3 of us, all really great companies.
Yeah,
I have friends at the other companies. Yeah. I think what it comes down to is the relationship that you have.
Personal relationships.
It's really the relationship. Some like to have relationships at more than one company. We have ours that are fiercely loyal to us, sure. and we appreciate that immensely, but it's we just want to give them that peace of mind. So to answer your question for the difference, just probably the business model that each one has. Yeah.
I mean, the others are big companies. You're a smaller company. I mean, you have all sorts of different.
We're not a big corporate publicly traded company. We are a local, family-owned, Northwest-based local company. So we're very proud of that.
Like John L. Scott?
As John L. Scott
exactly.
is. And, their business is regulated to heck. I mean, you all have to charge the same fees. You can't, everybody has to do the same thing. You can't do this. They got tons and tons of rules that you all have to follow.
We are very highly regulated. Yeah. There was, glory days back, kind of, you might hear stories where title reps were, washing your car and sending you on vacation and doing, grand gestures to buy your business. Sure. And that's what they really hammered. And so it is really relationships. We can do very nominal little thank yous. But it's more about you want to call your escrow officer to get a question, then you just want them to be available for you.
Sounds like the escrow business, Joe, took a whacking just like the lending business did after the Great Recession, didn't it? I mean, you think about that.
We never offered anybody anything.
No. no.
All of us were perfect through the whole thing.
Yeah, the lenders were perfect back in.
It's a blessing that it's regulated. It probably...
You like it? So you're okay with that?
I'm okay with that. And we all really do follow the rules just so that you can't kind of like whack someone in the knees out of the blue just because you're going to... We'll pay for your office space if you use us. You can't do those tactics.
To be fair, the reforms that were put in place, our economy was about to implode, and quite possibly the world economy with us, and we were about to be living without electricity and things like that. So that's not a good thing. We probably needed to step back and tighten it up a little bit.
Well,
and I'm really proud to be a member of the industry that has really refocused its practices across the board in all of these areas, and we are really trying to get people into homes that they can afford and can sustain.
It's it's more ethical. It's fair, and it should be based on the relationship.
When I wake up tomorrow morning, that's such a great feeling when you go to bed at night.
And would you say that your business gets most of its business from the referrals of a real estate broker or a lender or the individual buyer or seller? Would you say?
It's a combination of all of them.
Okay.
And so that is a big part of my job.
Mm-hmm.
So I want to be able to create as many relationships so that they think, gosh, I had a really good experience. I want to use them again.
Yeah.
Or I want to try them for the first time.
Yeah.
What kind of vacations did Pete and I miss out on?
Well,
What kind of perks? I mean, we came along right when the market went off the cliff.
It probably
all
didn't
that
happen
ended.
in Oregon, but I think in other states like Southern California.
Right, yeah.
Well, you could offer
That's-
money. I mean, you could offer money back.
Yeah.
You could offer rebates. You could give discounts for this and that. That's all out of the business.
Fly them to play golf.
Supply and demand business in this script. Hey, the Real Estate Show rolls on here on KMED this December. Hope your Christmas shopping is going well. Hope you're going to have a terrific holiday season. We'll be right back with the final segment here on KMED right after this. Real Estate Show rolls on here on KMED this December of 2015. Pete Belcaster and Joe Brett, the Real Estate Guys, with you. And don't forget, you can check out any of our past shows at realestateshowOregon.com is our website. You can also go onto YouTube and you'll find them there at Real Estate Show Oregon, and hope you'll check them out. There's cable TV shows and radio shows, and I think, I have to look back at 2015, okay? We had some really good shows. I mean, I think back to the marijuana, the legal marijuana shows, some of the tax stuff. I mean, we really had the water issues that we had this summer. Remember, the water master in here, and the sheriff was in here. We've had a lot. You
invite really good people to come visit with us every week, and they bring a lot to the table. I love it. Yeah.
They really are interesting folks. And so, anyway, check them out at realestateshowOregon.com is our website. Today, here we're talking with Guy Giles from Ditech Mortgage. He's our resident mortgage expert here on the Real Estate Show. And Corinne Waz, a business development officer with Amerititle here in the Rogue Valley. And so, Guy, right now, what's the best loan out there that someone might want to take advantage of? What's the best thing out there right now?
Well, if you're a veteran, that is by far the best loan out there. It really is. We got you get the lowest rates. You don't get any of the mortgage insurance. And if you have any service connected disability at all, they waive the funding fee. So it's a really good program. And then we send you off with a Visa card after we close the loan too. So
that's really nice.
Yeah, just as a kind of a thank you. So you can join the military if you want to get a really good loan.
And veterans should remember also, because you can get more than one VA loan. I mean, if you have a VA loan right now, correct me if I'm wrong here. So if you have a VA loan right now and you want to buy a new place, you want to move up, you can still get a VA loan, right, on the new place.
Technically, yes, you can.
This. Okay.
Yeah. Now, you definitely can sell your place, but believe it or not, you can actually have a couple VA loans at once if you haven't used. You have what's called an entitlement that's $36,000 right now, and if you haven't used all that entitlement, you can still use what you had. Or whatever you had left over. So if you have, if you've used half of it and then you want to go do another veteran's loan, they are an assumable loan, where by that meaning that another veteran can come in and
assume that loan that you have.
Yeah. And which is kind of attractive when rates are really low like they are right now, because 5 years from now, if you decide to move, but that's the one thing you have to be really careful of, is that guarantee that if you keep that house going, whatever guarantee you still have used up on that particular property, that goes away from your next veteran's loan. So think about that before you let somebody assume your loan.
Well, you wouldn't think there'd be a whole lot of veterans around, would you? When you think of the small percentage of Americans who actually serve in the military, there wouldn't be that many veterans, but they're reserves. There's all sorts of veterans out there. So yeah, I mean, I've not seen too many of those myself.
They have earned every benefit that comes with those VA loans for life, and benefits that go with.
Well, my son Mark, down in Texas, he got his first house, the VA loan. He was a U.S. Marine, and it was perfect. It worked out so well.
He also spent a few months in Baghdad to
get that loan. To be able to get that loan, didn't he? Yeah,
well, thank him for that.
Trade-off.
Yeah. Anyway, well, that's good to know. So VA loans,
probably 25 to 30% of my loans are veterans loans.
Really?
Yes.
Wow.
Yeah.
That's good to know. That's absolutely good to know. Corinne was Marititle next year. I mean, I don't think it's going to change. I think you're going to still hire people. We heard from you. It's your company, and you're busy.
We're not on a huge hiring spree.
No,
it was just it's refreshing to know come year's end that we are in that position that we could do that. And we're anticipating a really good 2016.
Yeah.
I think as an industry, it's projected to the wave will, I think the momentum will keep riding and maybe increase a little.
As long as the sales gap continues that we talk about, it's going to continue that way.
Yeah.
And that's a scary part of it, because the county assessor, Joe, we had a 7% overall value rise in Jackson County on January 1st.
We're going to continue
15
to struggle to build homes to meet our growing population and our growing area here.
And there's nobody in charge of that. I'm finding out about housing here. I mean, there really isn't. It's just kind of like supply and demand. Whatever somebody wants to build, kind of they're going out and building, and there's no kind of incentives. I don't know how I don't know how we get where we go. But
we're going to need some affordable housing in a big way going forward throughout our region.
Yeah, because we don't have that here. And look at the people coming here. Look at Guy. I mean, you tell us all the time, people from New York. You have another person who moved here as well for job. I mean, so you're seeing that all over.
They're coming. Definitely the hospitals. It seems to me that I do a lot of loans for nurses. Also, that are kind of moving to town.
And we only take cool people from New York, so that's good.
Dude, these guys are good.
Cool.
You're gonna like them.
You vouch for them.
They get a rural place. Tell me about that. Do they find it in town, or what
these guys are actually buying a second home out here. They want a place to just come and have a retreat to get out of. I don't know. The guy kind of cracked me up because he said keeps getting in trouble in New York for riding his motorcycle, and then I found out it's a dirt bike. So I said, if you get a plate on it, you could probably fit in a little bit better here. But
slightly,
they're coming for everything. Some of one of the gals that I was talking to today from Washington. She really likes the GMO laws that we have here.
I see. GMO free, recreational marijuana, and vineyards. Those are the three big things of rural properties. They're accelerating in value at a higher rate than residentials are right now. So there's a lot going on.
Valuable agricultural
land. There's not any more of it.
Yep.
Yeah, and if we have a good water year, think about that. That's going to be really interesting, isn't it, as we go along here? Wow.
And it's the sustainable farming and the local farming and the local origination of foods that people are preferring more and more. It's not just the vineyards and the marijuana grows. There's a lot of a diverse economy in our agriculture, growing far away from the pears and the trees that used to dominate.
Yeah, we'd like to see that, and hope it's going to continue because younger people are getting into that business. We're seeing that. So, Corinne, how can someone get a hold of you in Marititle? I mean, you're down there, and you've been here. You said 6.5 years in the valley. You've been doing this. Yeah?
I have. So I've been here 6.5 years. Prior to that, I was in lending for about 15 years, and then
did what he did.
I did. I did.
Got smart.
Lenders, they have a tough job. They really do. Yeah. No part of the team has an easy job, but there's a lot of pressure put on lenders, and so that's why it's so important to, work closely, really communicate, and let your lender coach you and guide you as a new home buyer or even refinancing, or it's your 10th purchase. Let them guide you through the process.
Oh, good. Well, nice to visit with you. How can they find you?
Okay, to get a hold of me, you can reach me at 541-414-5126. If you're new to the industry, even if you've been doing this for a long time, I can give you a tour. I have tools to help you with your business, and I want to get to know you. So call me,
because it is a personal business. We're finding
it really
is. It is supply and demand, and personal contact is the way it goes.
And our brand new website's at www.amerititle.com.
All right, and Guy Giles, they can find you and Google you. They can find you at Ditech Mortgage.
Yeah. Or my cell phone, 944-6987.
All right. Well, that'll do it for the Real Estate Show here on December the 19th. Pete and
Merry
Joe
Christmas,
here.
you guys.
Hey,
Merry
thanks
Christmas.
for joining us.
Have
a terrific. We'll talk to you after Christmas next week back here on KMED. Have a great week, everybody, and God bless.
You've been listening to The Real Estate Show on KMED AM and FM radio, presented by John L. Scott Real Estate of Southern Oregon, along with All Cities Property Management, the Home Builders Association of Jackson County, Ditech Mortgage, the Jackson Soil and Water Conservation District, and the Rogue Valley Association of Realtors. For guest information or to watch a past show, visit us online at realestateshoworegon.com. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED.